Hey everyone, ready for another deep dive? This time, we're tackling sustainable investing. And you guys sent in some awesome stuff like this Sustainable Investing, Implementing a Financial and Sustainability-Oriented Strategy by Henry Schilling, and a bunch of research from Morgan Stanley and the CFA Institute. Really cool stuff.
Yeah, there's a lot of buzz around this whole idea.
For sure. I feel like everyone's trying to figure out if you can actually do good and indeed do well financially, right? Like, are those two things even compatible?
That's the big question, isn't it? And it's interesting because it's becoming more than just like this, feel-good niche thing. Sustainable investing is getting serious attention from, everyone. Big institutions, individual investors like you and me.
Okay, but before we get ahead of ourselves, let's go back to basics. What's the actual definition of sustainable investing? This source we have here, how does it explain it?
It defines it as, there are different approaches, but basically it's about investors trying to make money while also promoting those long-term environmental and social values. So like aligning your money with your values, right?
Okay, yeah, that makes sense. But what's the real driving force behind it? The source asks, why do investors care? And that feels like the real question we need to answer.
Yeah, and the answer might surprise you. This study by the CFA Institute found that it's actually risk management and client demand that are the biggest motivators for sustainable investing, even more than wanting higher return.
Whoa, wait, really? So it's not just about people trying to save the planet.
Yeah.
It's big of make a quick buck at the same time.
It's a lot more nuanced than that. Investors are starting to realize that ESG factors, those environmental, social, and governance issues, can actually help them spot potential risks and make smarter choices with their money.
So it's almost like ESG is becoming this new, extra layer of analysis, on top of just looking at the traditional financial stuff.
Exactly. And get this, the Morgan Stanley Institute for Sustainable Investing did some research, and they found that 86% of millennials are interested in sustainable investing.
86%. Wow, that's a lot higher than I would have guessed.
Right. It's a huge chunk of the market. So you have this whole generation that's not just thinking about profits, but also about impact.
Right, like how their money is actually impacting the world. Makes sense.
And the source also mentions that women are particularly drawn to sustainable investing.
Really?
Yeah, especially this idea of making a measurable positive impact.
Yeah, that makes sense to me.
So we've got millennials, we've got women, and even those seasoned investors are starting to realize that sustainable investing might actually reduce risk. It's a fascinating shift.
It is, but now I'm thinking, okay, where do you even begin with all this? It feels a little overwhelming already just thinking about all the different options and things.
I hear you. It can definitely feel overwhelming. But this source we have actually breaks it down into three main approaches. You can go the DIY route, you can work with a financial advisor, or you can use a robo-advisor.
Okay, so a few different paths you can take.
Yeah, and it all depends on what you're comfortable with, how much time you have, and what you're looking for in terms of guidance.
Okay, let's start with the DIY approach. What does that actually look like? Is it more than just picking a few green stocks?
Oh yeah, it's definitely more involved than that. The source lays out 5 main steps for DIY investors. You need to figure out your financial profile, define your sustainability preferences, design an asset allocation, analyze and select your funds, and then there's the ongoing work of monitoring and rebalancing everything.
Okay, I get the financial profile part. You got to know your risk tolerance, your goals, all that.
Yeah.
But defining those sustainability preferences, that feels a bit more fuzzy. How do you even know what matters most to you?
That's a great point. And it's a crucial step. It's all about figuring out what values and impact areas really resonate with you. Are you passionate about climate change, social justice, access to clean water? It's about finding what truly aligns with your vision of a better world,
Yeah, that's what I struggle with, narrowing it down. There are so many issues out there. How do you actually do that?
I think it helps to ask yourself some key questions, like, what kind of world do you want to see? What problems keep you up at night? What legacy do you want to leave behind? Once you've got a better understanding of those core values, you can start to look at investments that actually match up with them.
Okay, that's actually really helpful. It's like you're creating this compass, right, to guide your investment decisions. But let's say I've done that. I know what my preferences are. What's next?
Well, aside from the DIY route, you've got some other options. You could work with a financial advisor who specializes in sustainable investing.
Okay.
They can help you come up with a strategy, choose investments, basically hold your hand through the whole process.
That sounds great, but I imagine that comes with a pretty hefty price tag.
It does. Usually advisors charge fees for their services.
Yeah.
But you're paying for their expertise and that personalized guidance.
Right. That makes sense. So what about robo-advisors? Those are like the automated version of DIY.
Yeah. Exactly. They're these digital platforms that use algorithms to build and manage your portfolio. They'll ask you about your financial situation, your risk tolerance, and these days, many of them even ask about your sustainability preferences. And then they'll use all that info to recommend a whole portfolio of investments.
So it's like having a computer algorithm that's tuned to your values.
You could say that. They're usually more affordable than working with a human advisor, and they're great if you're comfortable with technology and prefer a more hands-off approach.
Okay, so it's like a trade-off, right? Between control and convenience. With DIY, you're totally in control, but you got to put in the time and effort. With an advisor, you get the expertise, but you pay for it. And with robo-advisors, you've got automation and affordability, but maybe less personalization.
That's a great summary. It really comes down to what's most important to you, right?
Makes sense. So, okay, we've got these different approaches to sustainable investing, but the source also mentions all these different strategies, right?
Yeah.
From values-based to ESG integration. Can you break those down for us?
Absolutely. Let's start with values-based investing. That's where your personal values are really at the forefront.
Okay, so for example, if I'm vegan, I might avoid investing in any company that's involved in animal testing, even if those companies are doing well financially.
Exactly. You're making choices that directly reflect your ethical stance. Then we have screening and exclusions, which is kind of a broader approach.
So something like deciding I'm not going to invest in any fossil fuel companies, even if they claim to be transitioning to clean energy.
You got it. You're basically screening out whole sectors based on your own criteria.
Gotcha. So values-based is very specific, company-focused, while screening and exclusions is more about taking a stance against a whole industry. What about impact investing? That seems to be a hot topic these days.
Yeah, impact investing is all about directly addressing those social or environmental challenges through your investments. So the goal is to create positive change along with those financial returns.
Okay, so investing in a company that's developing affordable housing or creating clean water technologies would be examples of impact investing.
Perfect examples. It's about putting your money where your heart is, supporting companies that are trying to solve the problems you care about most.
Makes sense. Then there's thematic investing, right?
Mm-hmm.
Which is similar, but it focuses on a specific theme or trend.
Yeah, like if you're really bullish on renewable energy, you might build a portfolio that focuses on solar, wind, those kinds of clean energy companies.
Okay, so you're basically riding the wave of a trend that you believe in.
Exactly. And finally, we've got ESG integration, which is becoming super popular these days. This is where investors look at those environmental, social, and governance factors alongside those traditional financial metrics.
So it's not about excluding companies, but rather evaluating them through this more holistic lens, looking at their environmental footprint, how they treat their workers, how they govern themselves, in addition to their profits and losses.
Exactly. And it's becoming more and more mainstream as investors realize that these ESG factors can really have a huge impact on a company's long-term performance and sustainability. The source even gives some specific examples, things like greenhouse gas emissions, diversity and inclusion policies, executive compensation, even board diversity.
Wow, it's like you're evaluating a company on this whole new set of criteria, going beyond just the numbers.
You are. And that's what makes ESG integration so interesting. It recognizes that a company's ethical behavior and their sustainability practices are really tied to their financial health.
That makes a lot of sense. But even though it's becoming more popular, is there still debate about how to measure all those ESG factors? Like, how do you quantify goodness?
That's the tricky part. There's no standardized way to do it, and that can make it hard to compare different companies and make those informed choices. It's definitely an area where there's a lot of innovation happening. People are trying to come up with more robust and transparent ways to measure all that.
So you really have to be skeptical and do your research. You can't just take a company's word for it when they say they're sustainable.
Exactly. You got to dig deeper, ask tough questions.
And that actually leads perfectly into our next topic, building a sustainable investment portfolio. We've talked about why people are interested in this, the different approaches and the strategies, but how do you actually put it all together? How do you create a portfolio that reflects your values, your risk tolerance, and your financial goals? It feels like we've opened this giant toolbox, but now I don't know which tools to use.
That's a great analogy, and that's exactly what we're going to tackle in part 2 of this deep dive. We're going to get into the nitty-gritty of actually building that portfolio, from asset allocation to picking the right funds.
Awesome. I'm ready to get into the nuts and bolts.
All right, let's do it.
See you in part 2.
Sounds good.
Okay, so we talked about the why of sustainable investing and all those different approaches people are taking. But how do you actually build a portfolio, one that matches up with your values and your financial goals?
That's a great question. And remember how we talked about figuring out your financial profile, A&D, those sustainability preferences? Those are really the foundation for building a portfolio that reflects who you are as an investor.
Yeah, it's like bringing those two sides together, right?
Yeah.
The financial part and the values part. But how do you actually do that?
Well, it starts with understanding the building blocks of a portfolio. Think of it like building a house. You need that solid foundation, strong walls, and a roof that can handle anything, right? In investing, those building blocks are asset allocation, diversification, and choosing the right funds.
Okay, let's break those down. Asset allocation. What is that exactly? It sounds kind of technical.
It's actually simpler than it sounds. It's just about deciding how to divide up your investments across different asset classes, like stocks, bonds, and maybe even some alternative investments like real estate or commodities.
Okay, so it's like coming up with a recipe for your portfolio. You're figuring out the right mix of ingredients.
Exactly. And things like your risk tolerance, how long you're planning to invest, and your financial goals all play a role in figuring out that ideal mix. And here's where it gets interesting. Your sustainability preferences come in too.
So it's not just about finding the right mix of stocks and bonds. It's also about making sure those investments line up with your values.
Exactly. So, for example, if you're really passionate about climate change, you might put a larger portion of your portfolio into those clean energy stocks or maybe green bonds. Or if you're concerned about social justice, you might focus on companies that have a good track record on diversity and inclusion.
Got it. So it's about being intentional with every dollar you invest.
Yeah.
Making sure it's moving you towards that future you want to see. Okay, but how do you actually choose specific investments? Like even within a certain sector, like let's say clean energy, there must be tons of companies out there.
Right. And that's where diversification and fund selection come in. Diversification is all about spreading out your risk. You don't want to put all your eggs in one basket, right? So you want to invest in different companies, industries, and even different parts of the world.
Makes sense. Even if you're really optimistic about a certain sector, you probably don't want to put all your money into just a few companies.
Exactly. And that's where funds can be really useful. Things like mutual funds and exchange-traded funds, ETFs, those let you invest in a whole basket of securities with one purchase.
Oh, okay.
And there are tons of funds out there now that are specifically focused on sustainable investing. They cover a wide range of themes and approaches, so you've got lots of options.
Okay, so instead of me trying to pick out individual stocks, I could just invest in a fund that focuses on, say, renewable energy companies in emerging markets.
Exactly. You get that diversification, and you're tapping into a whole sector with just one investment. But here's the thing. Not all sustainable funds are created equal.
Oh, yeah. I bet there's a lot of greenwashing going on out there. Companies just slapping a sustainable label on something to try and attract investors.
For sure, that's a real concern. So you really have to do your research, look beyond the marketing, and really understand the fund's strategy. What are they investing in? What's their track record? And what are the fees?
So it's like being a detective almost. You have to dig into the evidence and make sure those claims actually hold up.
Right. You want to make sure the fund's investments really match up with your sustainability preferences and your financial goals. And here's a tip. Look for funds that are transparent about their ESG criteria and how they measure their impact.
Okay, so they're not just saying, we're sustainable. They're actually proving it, showing me how they're making a difference.
Yes. Look for funds that give you detailed information about their portfolio holdings, their ESG ratings, and even their engagement with those companies. Are they actually pushing those companies to improve?
Okay, so there's a lot to consider. What are some other red flags to watch out for when you're choosing these funds?
Definitely look at the fund's track record. How have they performed in the past? Does their strategy fit with your risk tolerance and your time horizon? And like we talked about before, pay close attention to fees. High fees can really eat into your returns, so it's important to find funds that are cost-effective.
Right, fees can be sneaky. Easy to overlook, but they add up over time.
Exactly. And here's another thing to remember. The world of sustainable investing is constantly changing. New technologies, new regulations, and new approaches are popping up all the time.
So it's not a set it and forget it kind of thing. You actually have to stay informed and be ready to adjust your portfolio over time.
Yeah, you got to stay on top of things. It's an ongoing process of learning, evaluating, and maybe making some tweaks along the way to stay aligned with your goals. And speaking of staying on top of things, remember how the source mentioned those sustainable funds stabilizing after that dip in 2022. That's a good reminder to think long term.
Yeah, but the source mentions that they stabilized, but doesn't really say why they dropped in the first place. Kind of feels like there's more to that story.
Definitely. And that's a really important point. Sustainable investing isn't immune to market forces or economic downturns. Just like any other investment strategy, there are risks involved.
Okay, so let's talk about risk. What are some of the specific risks people should be aware of when it comes to sustainable investing?
Well, one risk is that sustainable companies might have higher costs in the short term as they're shifting to more sustainable practices. They might have to invest in new technologies or comply with stricter regulations or even change their whole supply chain.
So their profits might take a hit compared to companies that aren't really prioritizing sustainability.
That's a possibility, and that could impact their stock price, at least in the short term. Another risk is that the impact of those sustainable investments can be hard to measure. There's no one perfect way to quantify goodness, right? And that can make it tough to compare companies and make those informed decisions.
So you could end up investing in a company that claims to be sustainable, but they're not actually having a positive impact.
That's a real risk. And it highlights why it's so important to do your research and look beyond the marketing. Find those companies that are transparent about their sustainability practices, have clear metrics for measuring their impact, and are actually working to improve their ESG performance.
So you almost have to become an ESG expert yourself.
It definitely helps to have a good grasp of the issues and the challenges. And it's important to remember that sustainable investing is still a relatively new field. So there's a lot of innovation happening, but there are also a lot of unknowns.
So there's a certain level of uncertainty that comes with it.
There is, but I think that's also what makes it exciting. You're investing in companies and technologies that are shaping the future, and that always comes with a bit of risk and reward, right?
I see what you mean. It sounds like sustainable investing isn't just about aligning your money with your values. It's also about adopting a certain mindset. You have to think long-term, do your homework, ask those tough questions, and be comfortable with a bit of uncertainty.
You nailed it. It's about shifting from those short-term gains to that long-term impact. But remember, you don't have to do it all alone. There are resources out there to help you navigate all this.
Oh yeah, that's a good point. Where can people go to find those resources?
There are lots of organizations dedicated to promoting sustainable investing. The Forum for Sustainable and Responsible Investment is a great place to start. They have tons of info on their website, including a directory of sustainable investment funds and advisors.
Okay, so that's a good starting point for finding some reputable resources. What about tools and platforms? Are there websites or apps that can help people evaluate companies and funds?
Oh, yeah, absolutely. MSCI and Sustainalytics are two of the leading providers of ESG ratings and research. They both have these online platforms where you can search for companies and funds based on their ESG performance.
So you can actually compare different companies side by side and see how they stack up on things like their carbon emissions or their diversity and inclusion policies.
Exactly. And those platforms usually provide these detailed reports that explain the reasoning behind their ratings. So you can really get a good understanding of a company's ESG performance.
That's awesome. It's like having a whole team of ESG analysts at your fingertips.
You could say that.
Right.
And don't underestimate the power of your own network, too. Talk to your friends, family, colleagues who are interested in this stuff. Share resources, bounce ideas off each other, and learn from each other's experiences.
Right. Building a community around this can make it less overwhelming and more empowering.
Exactly. And remember, at the end of the day, sustainable investing is a journey. It's all about finding what works best for you, your values, and your goals. There's no one right way to do it.
That's really reassuring. It feels like you're giving us permission to experiment and find what feels right for us.
Exactly. And even small steps can make a big difference. By shifting even a portion of your portfolio towards sustainable investments, you're sending a message to companies and the market that you care about more than just the bottom line.
That's a powerful thought. And it actually makes me wonder about the real-world impact of all this. Can making different investment choices actually move the needle on those big global challenges? Is it more than just a feel-good strategy?
That's a great question, and it's one we're going to dive into in the final part of our deep dive. We're going to look at the evidence behind the impact of sustainable investing, the challenges and opportunities it presents, and what the future holds for this rapidly evolving field.
Awesome. I can't wait. Okay, so we've talked about why people are interested in sustainable investing. We've looked at the different approaches and how to actually build a portfolio. But the big question is, does it actually have an impact? Can we really make a difference with our investment choices?
That's what everyone wants to know, right? And researchers and investors and even policymakers are trying to figure that out. The good news is there's more and more evidence that suggests sustainable investing can actually move the needle on some of these big challenges.
That's good to hear. But how do you even measure that impact? It seems like it would be really difficult to quantify. Like how much did this investment actually help with climate change?
You're right. It's one of the biggest challenges in this whole field. There's no one standard way to measure it, and it usually involves looking at a bunch of different factors.
So it's not as simple as just saying, okay, this company lowered their emissions by this much, so the investment was a success.
It's definitely more complicated than that, but even though it's complex, there are groups out there that are coming up with frameworks and ways to think about measuring impact, like the Impact Management Project. They've created these 5 dimensions of impact that you can use to look at the social and environmental outcomes of investments.
That's interesting. So there's a structure for thinking about it, even if it's not a perfect science.
Exactly. And it's important to remember that impact can take different forms. It's not just about the environment. It's also about things like social justice, economic equality, and how companies are governed. Like an investment might help create jobs in a community that needs them, or it might support a company that's providing clean water or affordable housing. Those are all positive impacts.
It's like you're expanding the definition of return on investment to include not just the financial gains, but also social and environmental progress.
Exactly. It's about recognizing that real prosperity is about more than just money. But even with these frameworks and new ways of measuring, it's still an evolving field. There's a lot of debate about the best way to do it, and we definitely need more transparency and standards across the industry.
It sounds like there's a big opportunity for innovation in this area. I bet technology could play a huge role in coming up with better ways to measure and track impact.
Oh, absolutely. And we're already seeing that happening. Companies are using things like AI and big data to analyze environmental and social data, and they're even developing blockchain platforms to track where the money's going and measure the impact of investments in real time.
Wow, so it's like we're on the verge of this whole new era of impact measurement, where we can actually see the results of our investment choices.
I think so, and that's super exciting. But even as we get better at measuring impact, we have to remember that sustainable investing isn't a magic solution. It's not going to solve every problem in the world.
Yeah, it's not like we can just throw money at an issue and expect it to go away.
Right. It's one piece of the puzzle. It has to be combined with things like policy changes, new technologies, and people changing their behavior if we really want to create a sustainable future.
So it's about using our investments to support those companies that are part of the solution, but also pushing for bigger systemic changes.
Exactly. And that's where collective action is so important. When more and more investors start demanding sustainability from companies, it sends a strong message. It tells CEOs and boards that sustainability isn't just a nice thing to do, it's crucial for their business.
It's like you're voting with your dollars, showing companies what kind of future you want to be a part of.
That's a great way to put it. And that collective voice is growing. We're seeing big asset managers, pension funds, even governments starting to include sustainability in their investment decisions. It's a trend that's only going to get bigger.
So it's not just about individuals making different choices. It's about a fundamental shift in the way we think about investing globally.
That's what's happening. And it's powerful. We're seeing the beginning of a whole new financial system, one that's more aligned with the long-term health of our planet and our society.
It's like we're rewriting the rules of the game, shifting from a system that focuses on short-term profits to one that prioritizes long-term sustainability.
I love that analogy, and I think that's what makes sustainable investing so compelling. It's not just about making money. It's about being part of something much bigger. It's about using your money to create a world that's fairer, more just, and sustainable for everyone.
That's a powerful thought. This whole deep dive has really changed the way I think about investing. I used to see it as this kind of cold, impersonal thing, but now I see it as a way to really shape the future.
I'm so happy to hear that. And remember, this is just the start. There's so much more to explore in the world of sustainable investing. Stay curious, stay engaged, and never underestimate the power you have to make a difference with your investments.
That's a great message to end on. Thanks for joining us on this deep dive. We hope you enjoyed it and that you're feeling inspired to learn more and take action.
It was my pleasure. Remember, the future is in our hands. Let's invest wisely.